If you ever felt like participating in the markets isn't paying off or that you're a terrible trader, in this video I'm going to go ahead and touch on how it's most likely not bad luck and you're probably doing a few things wrong. And so we're going to go ahead and touch on what you can do to go ahead and correct that and how this could help transform you into becoming a successful trader. Now there's probably a long list of mistakes that you're making, but in this video I'm going to go ahead and identify the top 5 mistakes that I believe most market participants are making. Now number 1 is going to be isolation from peer insights. And so what I mean by this is that if you're operating based only on your own research, you could be missing out on a plethora of good, valuable information out there. Now, I actually learned about this by simply reading a lot of the Market Wizards books. If you guys don't know, there's these books called Market Wizards. They're by Jack Schwager. And one of the things I noticed, specifically in this one, Interviews with Top Traders, is that a lot of the successful traders, they actually pay and subscribe for a lot of research and analyst reports, or even just trying to listen into what a lot of their successful peers are doing. They're not just only doing their own research, they're doing their own research and also reading the research of others to kind of have a better hypothesis of what's going on in the overall market. Now, a good example of this was actually in the famous financial movie called The Big Short, where one of the characters had this hunch that something was going wrong with the market and that something was going to collapse very soon because something smelled fishy. But rather than just acting on his hunch initially, he started collecting data from a lot of other market pundits to kind of better understand what's going on. You saw, this character travel to Miami, talk to the real estate agents, talk to, just other people, other market pundits that had some idea of what was going on in the market before absolutely realizing, and again, this was the, crash of '08 at that time, absolutely realizing that something was going to happen and that it was going to be a big move. And so this is essentially, again, what I'm saying, that you don't just want to rely on your own research, because you may miss out on something else that someone else is uncovering. And by kind of getting all the puzzle pieces together, you could have a better overall picture and understanding of what is actually taking place. But I want to provide a friendly reminder that this does not mean that you should listen to your cousin Joe Schmo and what he thinks about the overall market, because listening to anyone could be a huge mistake, especially if you have, your cousin out there telling you, hey, look, this is a great penny stock, it's gonna go to the moon, and it's based off of no reasoning, just because of feelings and vibes. Well, that's not good, right? You want to listen to some individuals that have credentials, experience, or some sort of success as far as being market analysts, or people who have found success in the markets. And this is why I pay for some subscriptions just to get research from large financial institutions, or even research from analysts themselves. And I also have my own paid private group where I actually kind of aggregate all the information I'm getting to kind of put it out there for other individuals who are looking for some research or just some ideas of what's going on. And so it's not a bad idea to surround yourself with individuals who are actually paying attention to what's going on. It's a bad idea if you surround yourself with anyone, and this is why I'm against just those public forums or just large communities of individuals from like any kind of aspect, because you may find some individuals with great research and insights, but more often than not, especially if you go on like Facebook groups or any other social media platform, you're likely to kind of find a lot of individuals who don't have a good, clear understanding of what's going on, sharing just horrible ideas and horrible, information. So definitely want to be careful and really just surround yourself with those that you guys perceive to have some valuable information that are willing to share it. But moving on to another mistake, something I often see market participants do is not expanding their educational or doing continued education into what's going on in the markets. And this is one of the reasons why pretty much I'm every month buying a new book, and it could be a book that's based off macroeconomics, fundamentals, technical analysis, or just different books, or just any other sort of learning material that could help me become a better market participant. Believe me, my girlfriend's always telling me, hey, why are you buying another book? Don't you have enough? And I'm like, no, right? Because if you're trying to do something very well, you don't just learn and then you stop learning. Learning is something that is on indefinitely as long as you want to be someone who is successful in any type of market. Regardless if you're trying to sell a bag of potato chips and be a local street vendor, you kind of have to learn some tactics to be the best in your market. If you're a real estate agent, I mean, it goes on to any other or any type of industry, right? Even doctors consistently have continued learnings where they have into conventions, and they all gather together and they talk about new procedures and new things and new technology. And so the idea is that you want to be able to be continually learning what's going on in the broader markets, or just learning different techniques, and not just stop yourself and say, look, I know it all, I think I could do very well, because the reality is you definitely don't, because learning never stops. Now, there's this proverb from the Bible that says, lazy hands make for poverty, but diligent hands bring wealth. But before someone says, whoa, why are you trying to get religious with this? I just want to put a quick reminder that you could find value in any type of scripture or even religion, and that even if you're an atheist, I truly believe this. I know a lot of my friends are just not really spiritually connected, and that's fine, right? I don't even consider myself that connected, but even if you're an atheist, right, and this is off tangent, there's definitely a lot of value that you can find from just proverbs in the scripture, or in the Bible, or any other type of religion, right? And so this kind of proverb right over here, stating how lazy hands make for poverty, but diligent hands bring wealth, kind of expands on the whole idea of working towards a path of continuous learning, as mastery is really just the process of perseverance and sharpening your skills. And so hopefully by watching this, you realize, and you could ask yourself, well, am I doing what I need to do to continuously sharpen my skills in participating in the market? But now, another mistake that a lot of market participants easily make is simply over trading. And believe me, I've been there many times before, as it's a very easy slope to fall into, but it's also very easy to correct, as you start to realize that just because you take on more trades, it doesn't mean that you're going to have superior results. And in fact, more trades can lead to horrible results, right? Because you're not looking for A+ setups. And that's one of the reasons why within the Push and Profit private group, whenever I share some ideas that I like in the market, I'm very selective. I'm not throwing like 20 different darts on the board and saying, look, I like all these names. No, because you want to be selective for names that meet your criteria. And if you're over trading, it's likely because you're trading a lot of names or a lot of tickers that don't perhaps match a criteria. Perhaps you don't even have a criteria, so you want to make a specific criteria that you like to look into or look for, and then only look for setups that synchronize with that idea, and only take action when you see that. Now, of course, there could be multiple times where you see multiple ideas that meet your criteria, and you still have to be selective and choose the best one that you believe is going to have a better result. And so the idea is just stop over trading. And sometimes I don't even take a trade for the day. Sometimes most of the time I'm just doing swing trades. Very few times I'm doing day trades. Only if I see like a good opportunity for the day. I know there's going to be a huge swing in the market. There's specific days. I have a separate video on this channel highlighting different days that kind of tell you when there's going to be a lot of movement within the market. And perhaps those days I'll do a day trade, but for the most part I'm really just doing swing trades. And again, that's all up into your preference. You can just day trade each and every day, but just remember that could lead to kind of over trading. And so even if you're someone who's a day trader and you're looking at the market every single day, intraday moves, well, you still want to be selective, and there may be days where you just take off, or maybe days where you don't see any action and you're like, okay, well, that's it, it's done for the day. Again, you don't have to force anything. And so hopefully you could identify this yourself and see if you're making that mistake. But let's go ahead and talk about the next mistake, and that is emotional decision making. Now, this one could be a pretty tricky one, because at the end of the day, we're not robots. We're still humans. We do have emotions, but you have to kind of take a stoic approach within the market and just look at things from a logical perspective. And if you start having too many emotions kind of pour into your trades, well, that could lead to irrational decisions. In fact, I had a video on this channel highlighting how there was this person on X.com who was shorting Nvidia, pretty much lost everything at the time, and then he tried to do a revenge trade because he was upset of losing everything in Nvidia, and guess what? He ended up losing more, because at the end of the day, he wasn't actually looking for a great setup. He was just emotional and wanting to make everything back on the same ticker or the same name that he lost everything from the first time before. And so, you know, it's something that you want to avoid. And yes, I know we can have frustration, we can have a lot of emotions that pour in, but at the end of the day, you have to be able to control your emotions, especially with jealousy. That's one that could really mess you up, especially as we're in the day of the advent of the internet, where now you see someone on X.com or maybe some other social media platform, you know, posting about how well they're doing within the market or within a trade, and you may be thinking, well, how is this guy doing it and I'm not? And so you're gonna start to, like, you know, fall into like the weakness of jealousy and try to copy the same trading strategy this person has, and maybe it's not the strategy for you. Maybe you see someone doing really well trading penny stocks and you're horrible at trading penny stocks. And so at the end of the day, you have to go ahead and control your emotions. But now, leading to the final mistake that I see many market participants make is simply inadequate risk management. And this is something I hone in, I pound the table on within the Push and Profit private group. That's why I'm often saying locking in profits. You see many times where, especially for those within the Push and Profit private group, where I take a trade idea, it's up, and I sell too early sometimes. Sometimes I sell far too early and the name continues running off, but guess what? Profit is still profit, and you want to be able to manage your risk. You want to be able to, if you end up having a loss, being a small loss, a loss where it doesn't, you know, make or break you. It's a loss where you could still go on for the next day. And so that's why I'm very careful when I adjust my stop losses. Every time I'm in a position, I adjust my stop losses. As it's moving up, I move my stop losses. This way, if the trade ends up going south, well, at least it locks in the profits and I could go home and sleep at night, right? It's not like, you know, if you have a trade that's up and you don't adjust your stop losses and then you lose it, well, then that could lead back into emotional trading, because at one point you were up in this position, but because you didn't have proper risk management set in place, you're down. And guess what? That could lead you to doing revenge trading or some sort of other emotional attachment to, you know, some failure within the market. And so that's why, again, it's always important to have risk management. In fact, this should be the number one thing that you work on. And so if you have this in place, everything else is going to be much easier to manage. However, if this is not in place, well, everything else is going to be a lot harder to do, right? And so that's why you want to be able to ensure that you're doing adequate risk management. Look at your risk to reward ratios. It doesn't even make sense to take a trade where you can make 1% of a profit but lose 10%. No, it doesn't, right? And so you want to find trades that really make sense with your risk to reward ratio, and also make sure that you're adjusting your stop losses. But with that said, hopefully you guys found some value in today's video. I just wanted to make a quick video to help identify some of the mistakes that a lot of market participants end up making. And so hopefully you're able to see where you're messing up on and identify that. And of course, you know, this is something that you're gonna have to continuously improve on. Again, that's the idea of mastery. But at the end of the day, you know, as long as you work towards something, you're going to find some sort of success if you're working on improvement. But with that said, hopefully, again, you guys enjoyed the video, and I'll see you guys on this next video right over here. Take care, guys.